Hello to you all. Welcome. Thanks for coming to the latest session here. We'll get started now. So in this market concept session, we want to talk about certain instrument types, specifically US share CFDs. Now, there's a couple of reasons for that. One is that the US share market is by far and away one of the most exciting markets in the world. And due to a number of fundamental reasons, that's most likely to continue to be the case for years to come. And the second reason is that US share CFDs are the latest addition to Fusion Markets product/service/instrument range. And so what that means is that whether you're considering opening an account with Fusion Markets or whether you have an existing account with Fusion Markets, you can now get access to the top companies on the US market and trade them long and short as CFDs. Now, the final benefit, which is no less exciting than any of the others, is that through Fusion Markets, at least for the time being, you can actually trade these CFDs, US share CFDs, commission-free. So as many of you will know, especially if you're coming from an equities trading background and especially from an Australian equities trading background, you typically have to pay commission/brokerage every time you make a buy or sell. And that continues to be the case for the majority of CFD providers, even on the US markets. But with Fusion Markets, again, at least for the time being, you can trade them commission-free. So no brokerage, no commission costs to buy or sell, which just in addition to all the other reasons makes it a particularly attractive time to at least consider adding US share CFDs to your arsenal, to your overall trading strategy/approach to the markets. So lots of things to consider. We're also going to jump across to the charts and jump across to the MetaTrader 5 platform and try to put some of these things into some practical examples to try to make the whole thing as clear as possible for you. But before we do that, there's a pretty simple disclaimer here. Fusion Markets is licensed in all the ways in which you would hope and expect. Nonetheless, we don't know you on an individual basis. We don't know your personal circumstances. So no matter how good any product or service is, you still have to give it some consideration as to how well it fits in with what you're doing in your personal financial circumstances, etc., etc. So if you're watching the recorded version of this, you might just want to pause that and have a proper read through. So moving on with the main part of the presentation here. A lot of you already have accounts with Fusion Markets, I know. And so the majority of you will be primarily familiar with MetaTrader 4 and primarily familiar with currency trading. So one of the benefits of trading with Fusion Markets, more broadly speaking, is you get access to multiple markets through the single account. So that includes currencies, equity indices. So an equity index, as opposed to individual stock CFDs, allows you to trade the performance effectively, or at least your expectation of the performance of an entire market. So there are index CFDs based upon effectively all of the major stock markets. So there's one for the Dow Jones, one for the Nasdaq, one for the Australia 200, the FTSE, the DAX, the Nikkei, all the major markets around the world, major equity markets around the world, that is. And through an index CFD, you're able to trade your view of the performance of that market as a whole. The key concept there being as a whole, as opposed to trying to find or looking at individual equities within that market, individual companies within that market. So there's also commodities, crude oil, etc., metals. And for the ever-growing cryptocurrency fan club around the world, you have your major cryptocurrencies there for you. Now, the latest addition, as I say, is individual stock CFDs. So there's a long list there available for you that we'll take a look at later in the session. And the list is growing, mind you. But all of your big household names there on the US market are certainly there. Apple, Netflix, Goldman Sachs, Disney, Coca-Cola, a long list of others, and having these all available to you through the single account just allows you to once again take advantage of the developments of these specific companies on an individual basis. So that's the big benefit there, and we'll talk about some of the other broader and also more specific benefits as we go through. Now, logistically speaking, the biggest thing to understand is that Fusion Markets offers access to two different platforms, being MetaTrader 4, which I dare say the majority of you are used to, and also MetaTrader 5. So MetaTrader 5 is the one that you're going to want if you want to trade US share CFDs. For those of you that a little bit of a newbie perhaps, or perhaps you're not the most technically forward person in the world, you might have spent a fair bit of time getting very, very accustomed to MetaTrader 4, and that's fair enough. Don't worry, however, because MetaTrader 5 is actually very hard to tell apart from MetaTrader 4. In fact, I can flick across to it now, just a moment. And so as you can see there, MetaTrader 5 that you're viewing on screen at the moment is in 99% of the respects effectively identical to MetaTrader 4. So don't worry about losing all of the knowledge and expertise that you've accrued over the years on MetaTrader 4. MetaTrader 5 is effectively the same thing. It just is a little bit more polished and has a few more bells and whistles. The biggest difference, in fact, is the way it works on the back end. On the back end, it's better set up to give access to additional markets, as we're going to talk about. So just to be really clear on that, MetaTrader 5 is what you're going to need. And towards the end of the session, I'll show you how you set that up. And if you have an existing account with MetaTrader 4, I'll show you how you can easily switch over and get access to MetaTrader 5. So just to be really clear there, if you have an existing MetaTrader 4 account, you already have access to foreign exchange, equity, indices, commodities, and crypto. But if you want access to everything, the all-in-one account, so to speak, MetaTrader 5 is what you need. And specifically, that gives you access to the stock CFDs that we're going to cover in more detail as we go through. Let's talk a little bit about CFDs and some of the benefits and why you might trade them or consider adding them to your existing approach to the markets in conjunction with currencies, commodities, equity indices, or any combination thereof. So there's actually a few things to consider here when we look at the benefits and the need to knows. And some of them are specific to the markets, some of them are specific to CFDs, and some of them are specific to Fusion Markets. So I'm going to try to put this in perspective for all of you as clearly as I can. So let's look at why you might trade US share CFDs in particular. Well, the obvious answer there is diversification. So the currency markets are fantastic, but sometimes due to low volatility conditions or macroeconomic factors or whatever the case may be, there may be times where you just want a little bit of diversification, primarily for the sake, of course, of finding additional trading opportunities, additional opportunities for profit, but also perhaps for the benefit of trading non-correlated markets or less correlated markets, therefore diversifying your risk exposure. Pretty obvious stuff there, and the longer-term investors amongst you, of course, will be very familiar with the benefits of diversification. Now, there's also greater trends in the stock market, and there's a number of reasons for this, primarily due to an inherent growth obligation in companies and large corporations, of course, which means that the board of directors are out there and they have an imperative to increase the value of their stock price. That's for the sake of their stockholders and their board of directors, etc., etc. And you don't have this in the currency markets. The policymakers, the heads of the Reserve Bank, etc., don't have an inherent motivation to increase the value of their currency price. In fact, in many cases, especially as we've seen over the last few years, it's quite the opposite. They want to decrease the value of their currency to boost the economy. Of course, we've seen quantitative easing and all kinds of money printing exercises over the last few years. But long story short, the central bank policymakers don't have the same motivation that a board of directors or a CEO of a major company has. So bottom line, that means that you can get much more explosive trends and much more longer term sustained trends in the stock market as opposed to the currency market. And that's the way it's been for some time. Now, that actually means greater volatility as well. And this is something that surprises people when they first hear it, or certainly when they first hear me say it, is because a lot of people have had this idea drilled into their minds that the currency markets are volatile. Well, everything has a degree of volatility. Nothing moves in a straight line or on a flat line, but there are certainly degrees of volatility that are much greater in the equity markets. And so that volatility there, of course, creates opportunity, especially for short-term traders who are looking to take advantage of these short to medium-term moves. So you don't want too much volatility because that can just cause too much risk and it can cause you to be stopped out of positions, etc., etc. But you don't want too little volatility either. But through proper analysis and through proper position sizing, especially, you can actually capture this volatility fairly effectively. And the real point there is that you don't want too little volatility because it can just create conditions that don't really provide any real opportunities at all. So with the equities markets, and particularly the US markets, again, talking about that excitement factor effectively, you do have plenty of volatility to take advantage of if that's part of your approach. There's also microeconomic factors, and we're going to be talking about that and some of these other concepts in a lot more depth in the later part of this session here. If you're watching the recorded version of this, it might be in a separate video, so you might just have to ask us for that one there. But microeconomic factors as opposed to macroeconomic factors that are predominantly in play when it comes to things like equity indices and more pertinently perhaps currencies. With microeconomic factors, you have the ability to analyze the performance of a market or security or company on a much more specific basis. So what that means is that separate from what's going on in the economy and Federal Reserve decision-making policies, etc., all of these large-scale global macroeconomic type factors, you can also get in and analyze, if you wish, what's going on with a particular company like Microsoft and whether its latest Windows release is going to be a success or a failure, whether the new iPhone that's coming out is going to have a positive or negative effect upon Apple's balance sheet, what Netflix is doing, what Goldman Sachs is doing, etc., etc. You get the idea. Some people don't take these things into consideration at all, of course, because they're purely technical traders. Some people are a combination of technical and fundamental traders. A lot of people out there do like to take these things into some consideration, at least, and combine the technicals and the fundamentals, perhaps at least for the purpose of doing some sentiment analysis and at least following the stories that are going on behind the scenes or within the industry of particular companies. So it can make things a little bit more interesting, and it can, beyond that, provide some real benefit in the sense of giving you some more ability to test your analytical skills by looking at what's going on around the world and following the stories. Just really looking at how things can play out overall and how the stories can develop. Now, tying in with that very closely and with a fair bit of overlap, in fact, is the idea of the thematic plays. So like microeconomic factors, thematic plays just allows you to look at sector developments, industry developments, perhaps developments in relation to particular types of technologies, and then give some consideration to how that might play out in relation to particular companies. And so, again, this is just all according to your trading strategies and your approach to the markets. But at least for some, these are some real benefits that come with trading US share CFDs, or in fact, these are more specific to the market as a whole. And when I say that, I mean they're specific to the US equity markets, or perhaps the equity markets as a whole. So let's have a look at some of the other benefits to take into consideration there. Firstly, and very importantly, some of the benefits of trading US share CFDs through future markets. So, and the first one there is ultra low costs. So obviously no one likes to pay more than they need to for anything. But with future markets, the benefit is that you don't have to sacrifice quality for costs. And that's a very important thing to take into consideration with something as important as trading the financial markets. So ultra low costs across the board, and no exception when it comes to US share CFDs. It's a great thing because there's so many factors that we can't control when it comes to trading the market. So being able to improve your bottom line through something that you can control, like your costs, well, again, if you can combine ultra low costs with high quality, then it really is a bit of a no-brainer. There's also ultra reliable execution, and I can tell you from experience because I've run multiple strategies across multiple brokers simultaneously, and the execution with future markets is second to none. Single account access, of course, as we've discussed. Security of funds is a big one, of course. No one wants to worry about that. With future markets, your funds are secured through the Westpac Bank of Australia and protected by Australian money laws under the highest degree of licensing available under the Australian Securities Investment Commission. And on top of all of that is the nice to have aspect of quality support. One of the reasons why future markets get such high ratings from the trading and investment community, certainly one of the highest, or the very highest rated brokers available. Okay, so particularly for the newer amongst you, let's talk a little bit about understanding share CFDs themselves. So CFD, quite simply, stands for contract for difference. So a CFD is a derivative contract for the difference between the exit value and the entry value on a particular underlying asset, whether that be equities or gold or crude oil or whatever the case may be. CFDs are actually the most versatile of derivative contracts. So basically what that means is that it allows you to profit, potentially of course, from the change in price without having to take ownership of the underlying asset. And of course, with that comes all kinds of benefits and flexibilities. So CFDs have been extremely popular for some 20 years now in the retail market, but they've actually been around for much longer than that. And like most of these things, they originate as something that's traded between big companies, big financial institutions, and then they make their way through to the retail world. And the CFD is no exception to this. It actually originated, depending upon who you ask, but originated in 1974 and was created for the purpose of trading gold, again, without the need to actually take ownership of gold or transfer ownership of gold. So that, of course, comes with some pretty big benefits in something that's awkward like gold. So having the ability to trade the price of gold as a CFD without having to actually take ownership, transfer ownership of gold was obviously a big benefit at the time. And then some 10 years after that, they started to become more popular for trading equities themselves. So transferring ownership of equities is obviously a little bit easier than transporting gold around the world. but it still does come with some hassles and costs compared to trading a derivatives contract. So institutions used to bypass a lot of that cost and bookkeeping hassle of trading underlying assets simply by trading CFDs amongst themselves. And so with the explosion of the internet in the early 2000s, when I came into this industry, that's when we started to see CFDs become very popular among the retail traders and investors, and it just continues to be the case to this day. So bottom line really is that the CFD is much simpler and more versatile than other derivative contracts. So when I say that, I mean in comparison to trading futures or especially options, primarily because the underlying price directly tracks the underlying asset itself. So what do I mean by that? Well, let's just jump across to a chart for a second here. And so what we see here, if we're trading the CFD, is we see the price of gold CFD directly tracking the price of the gold spot market itself. Now, if we compare that to the futures market, for example, you would see that the futures contract actually has its own price. So there's a bit of a discrepancy between the prices there, between the gold futures contract, which is a price based in the future, and the current or spot price, the now price of the underlying market itself. So if you're trading the CFD as opposed to the futures or especially the options contract, you're just trading the price of the underlying asset itself. And if you have a good CFD provider, of course, there should be effectively no difference between what's going on in the underlying asset price and the price of the CFD. And so naturally, this just makes the underlying market much simpler to trade through a CFD. And it also makes it easier for you to manage your risk or certainly calculate your risk. And so just to summarize things there, with the CFD, the price of the CFD is directly based upon the underlying asset itself, and therefore the price directly tracks the underlying asset there. You don't have any additional calculations or considerations to take into account in any meaningful sense. You can also easily utilize leverage. Now, I know the majority of you understand what leverage is, but let's just take a quick look at what that means for the newbies. So leverage, in bottom line practical terms, really just gives you the ability to trade amounts larger than your account balance or larger than the value of your account. So you might have $10,000 in your trading account, for example, but you can quite easily trade a higher quantity of gold or shares or whatever the case may be, utilizing the leverage available in a CFD. So you might have $10,000 in your account, but if you want to trade a quantity of $20,000 worth of Google or gold or crude oil, whatever the case may be, it's really quite easy to do so with a CFD and certainly very simple. So leverage is also known as margin trading / investing. And importantly, because a lot of people do get confused, margin and leverage are actually the same thing. They're just two sides of the same coin. And what do I mean by that? Well, for example, a 10% margin requirement equals 10 times leverage, 10x leverage, 10 to 1 leverage, just as a 5% margin requirement equals 20 times leverage, and a 1% margin requirement equals 100 times leverage. So don't let the leverage and margin concepts or terminologies confuse you. They're basically the same thing. If you're putting down a 10% margin requirement on a $10,000 position, that's going to be a $1,000 margin requirement for a $10,000 position. Okay, so which means that your margin requirement of $1,000 levers or leverages into a $10,000 position. And so having leverage available on your account just obviously allows you to utilize the capital in your account perhaps a little bit more effectively. So leverage, of course, is a very powerful tool beyond the increased profit potential. It also does offer you some more flexibility in your approach and abilities to diversify and hedge. But the bottom line with leverage is that it has to be used sensibly, and it has to be used according to the opportunity at hand. So just know what you're doing with leverage, and like any good thing, make sure you don't go too far with it. Just use it sensibly. Okay, so easily utilizing leverage is a big benefit there, of course, certainly for some. Easily tradable long or short. And again, for the newbies, I know a lot of you are experienced traders, but so when you go long, you buy something because we all know that markets go up. Going long is simply the good old buy low, sell high. However, as we also all know, markets do go down, they do go the other way. So going short is an attempt to capture the decrease in value of the underlying market itself. So it's essentially just the exact same process in reverse. If you think the market is going down instead of up, what you would do is you would sell, or you would go short first in the anticipation that the market is going to decrease in value, and you could therefore profit by buying back later at a lower price, at a lower value. So just like the old buy low, sell high, when you're going short, you're selling high with the anticipation that you can buy back later at a lower price and therefore profit from the difference between your entry and your exit values in the exact same way you would with the old buy low, sell high. So the biggest thing to get your head around is that through a derivatives contract such as a CFD, you can very easily sell something that you don't own, again with the view to buy it back later at a lower price. Okay, so everything is accessible via a single multi-instrument, single currency account, as many of you know. And bottom line there, just to finish up, they're also very highly cost effective, as some of you are well aware of already. So just to try to wrap up the benefits there and put them into perspective in different categories, as we mentioned, the CFD specific benefits include the fact that it directly tracks the underlying asset as opposed to other derivatives contracts, easily tradable long or short, depending upon your expectations of the markets, whether it's positive or negative. There's also effective hedging strategies. Hedging gives you the ability to use a derivatives contract, such as a CFD, of course, to protect an existing asset or existing investment or existing trading position, according again to your market expectations. And so jumping across to the charts here, we're going to use Facebook as an example there. So Facebook, like many stocks, of course, have had these significant long-term trends or runs to the upside. There have, however, been periods, and somewhat extended periods in some cases, where the market has declined fairly significantly. So we can see here in the case of Facebook, over some 112 days, there was a roughly 44% decline in the stock value there. So after significant periods of growth, it is natural to at least some degree to expect some kind of correction or normalization or move to the downside. Now, if you own the underlying stock, you may not necessarily want to sit through what can potentially be significant declines and can potentially be declines for significantly extended periods. So taking a short position on a CFD would allow you, in this example, to protect the value of your underlying investment in the ownership of the physical shares themselves. So you might own $10,000 worth of Facebook, for example. If you were to take a short position to the value of 10,000 on your share CFD, you would then be effectively protecting, directly protecting, in a very real sense, the underlying investment in the physical shares. So what that means basically is that while you're going to see, or you would see in this example playing out, a 60%, let's call it a 60% decline in the value of your underlying stocks, you would then directly profit to the same amount effectively in your CFD position. So one would offset the other, and this is just known as a hedge. And hedging just offers you the ability to implement a range of different strategies and effectively protect your existing position or investment in a particular market. Jumping back now, highly cost effective once again, and for these reasons and more, this is why we consider CFDs to be the most simple and versatile of the derivatives. Looking at the market-specific benefits there's diversification, greater trends, greater volatility, microeconomic factors, and thematic plays. As we touched upon before, and as we expand upon in greater depth in another section, there's the fusion markets benefits, once again, being ultra low cost, even by CFD standards, ultra reliable execution, single account access, once again, security of funds, quality support, as we touched upon previously also. So now let's talk about how to get started, how you can actually take advantage of these things that we've discussed thus far. And particularly for those of you who are looking to trade US share CFDs, we'll talk about how you can take advantage of the fact that Fusion Markets is offering CFDs with no commission, no brokerage, that is. So we'll jump across to the website now to take a look at that. So below the video, depending upon where you're watching this, but below the video, you will see links. But as many of you will already be familiar with, this is the Fusion Markets homepage there. If you go under trading menu, as you see here, you will see US share CFDs, and that will take you through to this page here, which gives you some more information and covers some of the things we've already discussed. There's a list of companies available to trade, an ever-growing list, mind you. Looking at the leverage requirements there with US share CFDs, we talked about leverage already, but the leverage is 20-1, which means there's a 5% margin requirement, leverage and margin being the same thing effectively, as we already discussed. But that's all there for you on the website if you want to explore that a little bit further. Now, if you're an existing client, just in the upper right there, as many of you already know, just go to client login like so. Or if you're looking to open an account and become established as a Fusion Market client, you just hit the create account button there. Now what that will do is it'll take you through to this page here where you can enter very, very simply your email, create yourself a password, confirm your password, check the fact that you're over 18, as we hope you all are, of course, and then hit the sign up button. Now that instantaneously will take you through to the Fusion Markets Hub, as it's known, which just allows you to access all of the things that you would need to access as a client. So it's kind of like logging into your online banking. You can see all of your accounts, you can open up new accounts, you can contact support, you can get access to all your other account admin type stuff, and a few other nice little tools and benefits there for you too. But to open up a new account, you just hit that new account button there, nice and easy, and then you select your trading platform. And so if you want to have access to US share CFDs included in your account, amongst all the other benefits that come with MetaTrader 5, just select MetaTrader 5 there like so, and then click create an account. And so what that will do is it will, as you can see there, is it will create a new account for you. You'll receive an email notification from the support team to let you know either that your existing account has been set up and approved, or if there are supporting documents that you need to send through. But once you receive the relevant email notification there that your account is established, you just go through to your payments section there, like so. And from this page, you can either deposit your initial funds or additional funds if that's what you want to do, Or if you have an existing MetaTrader 4 account, for example, you can just go and select that MetaTrader 4 account, select your newly established MetaTrader 5 account, and enter the amount that you'd like to transfer. And then once you hit that transfer button, it'll instantly transfer the funds between your MetaTrader 4 account to your MetaTrader 5 account. And from that point, you're up and away. You just go and open up your MetaTrader 5 account and log in, and you'll see the funds instantly available. So MetaTrader 5, once again, is extremely similar to MetaTrader 4. You'll barely notice the difference, besides a few bells and whistles and a little bit more of a polished interface. But the big difference, of course, is that it just gets you access to US Shares CFDs. So as we see here on the left, by default, you're probably just going to see currency markets or maybe a few others. Now, if you want to look at US share CFDs, what you do then is either add the US share specifically by typing in the company name. For example, we can see here Netflix, same with Apple, Goldman Sachs, just like so. And we just click that one to add it to the list, as we can see here. And then you just drag that onto the chart, like so. And from there, you perform your analysis and place your order effectively in the exact same way as you would with gold or a currency or an index contract, whatever the case may be. Now, the other way is to just go and show all of the available markets by simply right-clicking somewhere there and selecting Show All, and that'll just show everything here in the Market Watch window. So the quick way to navigate through this, if you're looking for a particular company, would just be to start typing it. So if you were looking for Netflix, for example, N-E-T, and then it jumps straight ahead to Netflix, like so. If you want to jump across to Coca-Cola, we type C-O-C, and there we see Coca-Cola. We can drag it to the chart, like so. And so you get the idea there. The other way to do it, if you wanted to filter by specific market type or asset class, you right-click and you select Symbols, and that just gives you the ability to select the categories, like so. So if you only wanted commodities, for example, select that one, select Show Symbol, and that would then show only commodities in the list here. Okay, but you probably get the idea there. And for most people, it's better to just show all and see all of the markets. And so that's how that one works. If you do want to get started, by all means, get in contact with any questions you might have, or scroll down below the live session, or if you're watching the recorded version, either way, just scroll down the page and you can see some additional info and links for getting started and finding more information. Other than that, thanks very much for coming along, and we wish you successful trading and investing as always. And bye for now.